Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
We got to talk about, of course, the Trump bump, which is still in effect, by the way, and we have got a smooth transition. That's the good news. Thank goodness. As it relates to disruption here, would not have been a good thing. And he started out right away disrupting the executive orders that were in place. So if you had time yesterday, that was one of the first things he did. He went through basically about 100 and reversed them. So lots and lots of orders reversed, federal hiring freeze and the like, but no specific announcement on tariffs. So, TikTok got a delay, pulled out of the Paris Climate Pact, the World Health Organization, things that he had already said he was going to do. Lots and lots of oil and gas leasing bans were revoked, as well as, of course, talk about tariffs, but none that were actually rolled out. He did talk about Mexico and Canada by February 1st, if they don't get their act together, apparently, and deal with the fentanyl. But it was really kind of hidden, I think, where the focus was on trade with China. We haven't had anything yet. He's still obviously negotiating that deal. But lots of focus, and the dollar dump was on the announcement of threatened plans to impose duties as much as 25% on Mexico and Canada by February 1st. Don't be surprised if those get lifted. I really think that has a lot more to do with the fentanyl and migration. And he's already really spoken to that very seriously. So I think that's not so much trade as it is immigration and fentanyl. So the big focus is going to be on China. China trade, that has not been announced, but even in the executive order where he talks about trade, he references China 10 times. Only Canada and Mexico as it relates to migration and fentanyl flows. So I think we're waiting for the big shoe to drop here. Also, of course, as part of kind of reshoring efforts, there will be, I'm sure, some tax changes. This literally was just announced. Has ordered officials to draw up retaliatory measures against countries applying extraterritorial levies on U.S. multinationals. And we know this is where the money is hiding. We know. So it's a good threat there for reshoring. But long story short, we have got a tax regime that enables and I would say encourages pharma companies, mega cap tech companies from going abroad and staying abroad, not repatriating those profits home so that they are not taxed and finding other ways to hide them. So he would really kind of take a little hit there to tech earnings, which would be potentially market bearish. Got to follow through on all of these things, by the way, but this is just something that would help with a bearish backdrop for the large tech companies, which right now have earnings coming in. And I have got a sneaking suspicion that everybody is really eyes on the prize. How important is it for them to beat? Now, we already know Apple got downgraded and just got downgraded again this morning. All eyes on Microsoft and Capex are really very front and center as it relates to this IA transition, not to mention the new quantum vibes. But they have got to beat. They've got to beat handily. And yes, the bar has been lowered, but I don't think it's going to be at all easy for Q2, as I mentioned. So we've definitely have had higher energy costs, higher yields, higher dollar as a headwind to their bottom line. And now we've got threatened global tax regime changes, which would also force some new accounting, creative accounting, I'm sure. But this is also going to lend to that thesis of mine that I still think Q1 is going to be fine, like the earnings. But they do have to crush it. The bar is lowered. We know that. Q2 is just going to be tough. It's just going to be really tough. So keep that in mind. We are not out of the woods here for rest of year by any stretch. And then you probably saw how Trump is also going to be freezing hiring in government jobs, which makes sense, of course. But the reality is they have been, I'm talking about U.S. government jobs, has been the absolute driver to keep unemployment low. The private sector has been crowded out and is responsible for job losses in the prior year. So we would have a much bigger unemployment rate if we did not have that hiring that was going on by the US government. So the fact that they have frozen hiring means how is the private sector going to take up that slack? Not easily at all. So we have also a lot of clarification here on this DOGE, Department of Government Efficiencies, which is really, really not about cutting dollars, as threatened or promised by Musk. Vivek is not in it anymore, so now it's the Department of One. Musk will run it, and he'll. They found a way around, so there won't be an immediate lawsuit against this non-elected official, Musk coming in and directing U.S. policy. Nope, they found a way around it. Anyway, this will be very much about capturing data, very focused on having the AI tech bros filtering through tons and tons of juicy training data for policy recommendations. So Vivek is out. We have a new kind of flavor here as it relates to Department of Government Efficiency. We have probe into Beijing compliance, but nothing yet. And then, of course, I'm sure everybody saw the meme coin. I hate to even, bring it up, but literally this Trump meme coin that came out and went to market cap territory that was ridiculous, just diminished, as far as I'm concerned, the whole legitimacy. But that's my little hill I'll die on. Anyway, I'm very curious how much money Hood made from this transaction. But the point is, there is no question those who are loyal to Trump are getting the inside track, and the inside track on his meme coins and the rest are making them gazillions of dollars. As I just showed you, that one transaction went from 1 million to 300 million in a New York minute. And Bitcoin was not talked about in his executive orders, but that's not really the point. The crypto move, the crypto craze is still in full effect, and this is still correcting in time, not price. It did hit a new high this weekend of 109,000, so it still looks pretty perky. Also, Ethereum's coming back up off the Midland area, so we're still watching that. But in the meantime, the dollar is the focus for the most part. You've got a big dump when there was an announcement of February 1st, Mexico-Canada tariffs, and then it kind of popped a little bit. You can see what happened with the euro and the pound sterling. They have reversed higher. You can see yen and yuan have reversed lower, but this is a gap down on tariff threats. Very unlikely that they're really going to go forward, by the way, on February 1st with 25% tariffs on Mexico and Canada. But it is a good market mover, right? We're going to have a few of those. Lots and lots of headline risk over the next, 4 years. Gold is getting more supported, and why wouldn't it? Lots and lots of gyrations here to get back above 27.5, but this is definitely still grinding higher. Silver will have its day later, and you can see yields are softening, which means that TLT bull risk reversal is still very strong with a February expiry and has not even come back down yet as a test to get back in. He has already called an energy emergency, which is really kind of funny, but talking about tapping down energy costs, which, if you know, there is really that's definitely political. If he really wanted to make some significant change, he'd go into auto insurance, right? That's just the 12-month change is up 11%. He talks about housing, but best way is to lower interest rates. And ultimately, energy is not going to be the whole kit and caboodle, but it's definitely a bear trap, as warned when it got back up here into that 79.11 area. You can see the gap down and then the continuation, right? So we're back down from that 79.11.80 area into my 75.65, and it looks like a nice softening. Yields hit that perfect 4.79 and then gap down and are still softening. So bonds are bid, yen not so much today. Bank of Japan has their meeting Friday, so Thursday night we'll start to get kind of anxious about whether they hike or not. In the meantime, in the between time, market's feeling the vibe here of higher based on reduced regulations, tax cuts, and no specific tariff policy announced. So the relief is still in the house. All right, so here is the dollar. We had this really kind of nice head and shoulders. We're dumped right back down to 108. 108 is the support. And you know this from the last time we had post-election, the run-up where we had inflation starting to get priced in, pro-growth policy starting to get priced in from Trump. We've moved all the way back up here, and the anxiety around what about tariffs? And then, of course, will there be job shedding at the U.S. government? government level, which will really require the private sector to pick up the slack, or we're going to have a higher unemployment rate. How are they going to tackle that? So this is, as I mentioned, kind of the smile. So the dollar moves higher, both in times of stress, fear, economic slowdown, and it moves higher also in greed, economic growth. So the dollar of late has been attributed to moving higher on the Trump win and the pro-growth policies, reduced taxes, regulation, etc. And we will see if this initial rollover retest, which was already very extended, will turn into a theme. But we would need to get and stay below 108. You know the lines, you know the levels, and then big picture back below 105, 105.40. I do have some intermarket that I did. Dollar is still supported, big picture. The other time that it goes higher, of course, is in risk off when we're kind of worried about an economic slowdown. That's not right now in the cards for the reason it's more the tariff tremors. Here is the bear steepener in the 2-year, 10-year yield curve, which on a daily, you will notice that it has broken my key cherry-picked indicator and it has flattened as bonds got bid up with the yen. Now, you can see on a weekly, however, it has not broken its trend. So in a short duration, yes, it has flattened. That has helped the bond bounce. But on a trend standpoint, it is not done. It likely comes right back down to where it broke out and turns and moves higher. It has a habit of every price target, like there it is, it's so close, just go get it. Nope, it's going to come back now, and more likely, if it stays in this mode, which I think is happening, where the bonds are getting supported as the yields fall, right, and the dollar falls with it, this is going to come back down and it's going to get supported and move higher. And so then we're really going to have a test of the Trump 2.0. You can see what happened with this bear trap. It was very bear trappy, bull trappy, I should say. This was the trend line. We made it all the way up. It was a nice kind of 7 to 9% advance here, and then it moved even stronger. So we had a overshoot. This was my overshoot level to 79.11, 80.5, and then we did a complete alley-oop. Now the oil and gas companies underneath the surface did a lot better, right? You saw the refiners, you saw the XLE contingency. The oil and gas space was just very firm, even with metals and mining, but much more so the energy space, in combination with a anticipated falling dollar in yields, but also the policies, and also the fact that we had that growth rotation, which was right here, demonstrated in this head and shoulders, kind of come back down into this 2.0. This is my growth value rotation. Lovely pullback, really strong pullback, which helped the XLE, XME, and all the rest, basically interest rate sensitive plays, come up off the ground. They come up off the ground because we're expecting the yen to move higher with BOJ potential hike. We're expecting bonds to move higher with the weakening in dollar and yields, which is a strong Trump trade, if you will. Now that he's in, we got to see if we can actually follow through on fundamentals, not just sentiment. But this definitely showed that we were going to have a rotation in value, which means when this indicator is falling, value plays are bid. It has not even come back down to base to move higher yet. So they're still bid, long story short. We've come all the way back down again to that kind of 75, 65 area. That's the orange right here. Boom. And nat gas is still playing with that 3.4, but it's doing a lot better. In fact, it does look a little bear flagging, so could soften some more, but big picture, all of this incredible run up. This is the crack ETF, right? Valaro, PBF, Marathon, and the lot. They did a one-way train here into this inauguration. So it is time for a little pullback, a little digestion. I know folks are like, what do I get in the energy space? Wait until it comes back and digests a little bit, because this is the run up. It gets very exuberant. And then it says, oh, that's right. I got to look back down here and get a case of vertigo. So we are having that little case here, right? This is light crude oil futures, had a wonderful run up, overshot. That was the overshot. And now look at it, comes right back in. So you can kind of hold in a little bit for some stabilization here in the oil and gas land. I don't think this is unusual that we get too excited and then come back in and digest. All right, so this was that head and shoulders move in my dollar yield ratio. Boom. And with that, this jumped here. Remember that day? I had to get and stay above 59.05. And then it continues to fall, right? Little bump, and then it continues to fall. Little bump. bump. So big picture, we're getting closer to that 300. So 300 is the risk off level, as I mentioned before. I'll show this to you on a big picture, but the point is we are coming back down, stair stepping now. First we took, right, boom, elevator down, and now we're stair stepping down, and we're going to head back down to that 300, and we'll see how it does then. But for right now, we got a lot of gaps to fill, both on the downside as well as the upside still, but we're going to hit that, right? We're going to hit this gap from 60.37 in SPX. Obviously, it's pre-market, so you don't see that, but we are already doing a push in the NASDAQ from the election gap fill all the way up into the prior January 6th high. So this is on a 2-hour chart, it's hard to see, but remember the green shoots from Friday, December 20th, which was the end of options expiration, right? So we had this big bump, and then we made a retest, and then we made a little bounce, which was still a lower high, a little lower high. Now we've beaten that. So now we've absolutely gotten above the lower high. It's much more productive. It's broken a lot of this pattern, and it's excited about moving into 527 next. But down here was SPY. If you remember, I had that 596 as next price target, pretty easy to see. It's that trend line. We hit it by Friday, and then we just kept going. And here's the next price target, which is the 603. Now up here, I would not expect it to get volatile above because we have earnings. Typically, earnings are kind of like this volatility clench. We don't do too much. So I think that's pretty much where I would expect some softening up here is in this 603. So if you've got SPY and you had the 596, we've moved all the way back up into the 600. I would say an overshoot to 603 area, which is that trend line, is likely where we digest for a little bit.
Join Club today to engage with Samantha and her team of 10 experts. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.